Hey, all right, guys, welcome back to another special episode of the Migrant Hope channel. It is me, your host, Charlene. Woo-hoo. Ooh. We're actually going to be talking about before you go into public accounting, and this is probably for students or maybe even some professionals who are kind of thinking of going into the public accounting space. What should you consider? What does it actually mean to work in public accounting? Should you go into tax? Should you go into audit? What hours are you going to be working? What businesses and what kind of clients are you going to be working on? We're going to dive into all of that today, and I'll catch you guys in the video. Make sure you like, share, comment, and subscribe. And so when you hear someone say, oh, I work in public accounting, or it's a field in which you want to go into, the first thing that you definitely want to know is, no, that doesn't mean that you work for the government. That doesn't mean that you're a government employee. So public accounting, basically, it's a career path, or it's an industry or career in which you can either provide audit services, you can provide tax services, or you can provide some consulting services to your clients. Now, the consulting services will probably fall more under the tax, and also depending on what kind of ad hoc projects that you have under the audit space. But that's primarily what it means. Within public accounting, you can either go into audit, like I mentioned, or you can go into tax. And then I'll break those down as we go throughout the video. But we're just to keep that in mind. No, you do not work for the government, or are you a government employee? So let's say you've actually decided to go into audit, right? And you're trying to get an understanding of what it actually means to go into audit before you actually make that leap. So the first thing to understand is audit is a career. Audit is a career within the public accounting space where you are providing reasonable assurance, where you're looking at your client's financial statements to determine whether the numbers which are actually stated on there is fair. In layman's terms, that just means that the numbers which are on there, if they have a revenue number, they have cost of goods sold, they have inventory, they have property, plant, and equipment, are those numbers which they are claiming to have, are they actually justified? Are they actually true? Now, when you work in the audit space, you can either work on public clients or you can work on private clients. When you hear the word a public client, it just primarily means that your client at the time will be traded on the New York Stock Exchange, or you could be traded on NASDAQ or any of the other stock exchanges, depending on what country you are located in. I'm in the US, so of course we have primarily the NASDAQ, and then we have the New York Stock Exchange. So that's what that means when you hear public versus private. Now, if your client is a private client, it just means that they're privately owned. It means I could own it with my family. It could be like a family-run business, but of course it just will still need to require a lot of private companies, even though they are private and not publicly traded, they are still required to have financial statements at the end of the year, and this is very essential if they need things like debt, if they need things like new investors. Even if they are private, you need to be able to show your investors or show people who have a stake in your company that you actually know what you're talking about and your company is actually doing well for whatever service you are asking them for. Now, this is another important thing to take note of, what it actually means to work in audit or to be an auditor. Like I mentioned, you're providing assurance to your clients to make sure that their financial statements are true and they are fairly stated. Now, this is something to just really keep in mind. If you work in audit, primarily if your clients are going to be publicly traded companies, you're going to have to provide an opinion, which is it's literally like a one-page letter that's where the auditor or the independent public accounting firm will say, oh yeah, we looked at all their financials and we definitely determined that their numbers are fairly stated. You're going to have to provide an opinion not only on the qualitative side of things, which is like the controls, but you're actually going to provide an opinion on the financial statements, which is on the quantitative, which is like the actual numbers. Now, let me break this down a little bit. So as an auditor, you're doing work on the qualitative and on the quantitative side of things. When I talk about qualitative, it's saying that, okay, does this company have the right controls, right? Because before you see any number on any financial statement, you need to understand that there are several controls within that company that have to be in place for us to be able to justifiably say that those numbers are right or those numbers are wrong, for example. Let me give you an example. If, let's say, I worked for Walmart, for example, example, right? Walmart is a publicly traded company. Now, some of their controls, for example, you can think of when you go to purchase a fan, for example, from Walmart, right? The person who scans your transaction, like the cashier, is not the same person who deposits money in the bank. That is a control. And the reason they do that is because it's human beings, right? If I'm the person collecting money and I'm the same person who is depositing in a bank, there's a very high chance of me being encountered with a situation of theft. There's a situation in which I would have the opportunity to be able to steal money. And how can you justifiably say that, oh, I mean, what if I have a financial difficulty in my family, right? I can justifiably in my own way say, oh yeah, I took some of this money to be able to help out somebody in my family. So that's what that kind of means when you're working on the qualitative side of things. We need to make sure that the company has accurate controls, and the controls are not only there, but they're actually being followed and they're actually being regulated. And as part of your audit work, you're going to have conversations with the control owner. That's what it's called for every different company. And then you kind of have different steps in which you have to really drill down to make sure that you not only understand, but the control is being operated as it was designed to be. Now, on the flip side of things, after you're comfortable with the control, because if I'm comfortable with a control, right, if I know that there's segregation of duty, if I know that one person who deposits money is not the same person who collects the money, then I feel more comfortable knowing that the numbers that you're actually representing are true. Like if you say there was $20 of sales today, I know, for example, that indeed was $20 of sale. That's why it's extremely important, especially for public companies. They have to look at the control side of things and then also look at the quantitative, which is like the actual number. So as of the actual number, you'll be doing a lot of substantive work. For example, if you're going to be testing revenue, for example, if you say, oh yeah, Walmart sold 20 fans today, how do we justifiably know that Walmart sold 20 fans maybe to TJ Maxx, for example, right? It's we're going to get an invoice because Walmart is going to send an invoice to TJ Maxx. So that's just an example of what the quantitative side of things is and what the testing you're going to have to do looks like. You're going to be looking at like numbers, you look at invoice, you look at purchase orders, you would look at finance agreements, depending on what it is. But that's kind of what you do in audit, both qualitative and quantitative as well. Now, since this video is for anybody who is trying to think of whether you want to go into audit or tax, or if you're just interested in public accounting, I'm sure you guys have heard you do work busy season hours. Let me tell you guys, it is not a joke, right? And nobody is trying to lie to you. If anybody tells you they don't work busy season and they work in audit, tell them to come find me, because that's not true. Everybody who works in busy season who works in audit primarily has a busy season. Now, the reason why busy season even exists is primarily because for most companies which are publicly traded, they have a 12/31 year, and that just means they close their books for the year on December 31st of each year. And if you're publicly traded, you're required by the SEC, which is the Securities and Exchange Commission. They're actually required to file financial statements throughout the year. But for Q4, which is what happens usually at the end of the year, which is the fourth quarter of the year, they're actually required to file a financial statement called the 10K, which is like their annual audit, which captures everything that has happened throughout the business for the past year. And the reason that happens usually, and the reason busy season also exists, right, is because usually towards the end of the years, that's where every company would try, there's a very high risk of them trying to inflate their sales, because it's towards the end of the year, bonuses are coming around, investors are really actively looking, everybody wants to look good for investors so that they don't think that there's a problem with the company. And as a result of that, there's a lot of risk around that area or around that time frame. That's why we tend to do a lot of audit work surrounding the Q4 processes, Q4 procedures, Q4 happenings, because a lot of risk, it's a much riskier time within the whole year. So of course, because it falls during 12/31, that's why you will typically have busy season. Now, for public companies also, they are required to file these financial statements like I mentioned, right? But they have to file it within a particular date. And depending on whether you're there's something called an accelerated filer versus a non-accelerated filer. If you're an accelerated filer, it means you're just a lot of larger billion-dollar companies are accelerated, and that means that they have to file between like 30 to 60 days, something like that, you know. And people try to file earlier. The earlier you file, the better it looks for you, the better it looks for your investors. So when you work in audit, you will tend to find a lot of times that your clients may be on you, so that we can on you as the auditor or as the audit team, so that you can try to file early, because it tends to look very good on them. And it's also good, right? Busy season is done earlier, but you do work busy season hours, and just keep in mind that it's something which is real. And the last thing, or one of the last things for audit, is busy season usually would run from like January to about March. I've had instances where, and that just really depends on if you're on a public client primarily. If you're on private clients, they tend to run a little bit longer, and that just means that they just start a little bit later as well during the year. On average, it'll be about 3 months, and it's usually at the beginning of the year, so during winter, depending on what part of the world you are located in. But in America, it's typically during winter time. So that's just something to keep in mind. You will work on average about 60 hours. You know, I would say that that's the standard for busy season. So you will do that across the span of like 6 weeks for public jobs, or you could do it longer, depending on what clients you are on. That's just something to keep in mind. And then guys, the last thing for audit, which I say it's really important, is sometimes you may be trying to say, okay, I want to go into public accounting, but I don't know if I want to do industry, or I want to do a smaller tier firm or big four firm. But if you work for a big four firm like myself, you get the opportunity to choose what industry typically you want to work in. So, and by industry, I mean you could either have clients which are in the retail space, clients which are in banking, clients which are real estate clients. You also have some hedge funds, some equity, and some hedge fund type things, all these banking things. I don't do any of that, but that's just something that big fours have because of the size of the company. They have a lot of clients, so you have the opportunity to pick. You guys already know this. I primarily do consumer markets, so most of my clients are centered in the retail space. I have done some technology work, but primarily products and services. Never touched the bank, never touched the hedge fund, never touched a real estate firm either.